Now, Steve Rhodes.
Good morning, Money Basters, all you wonderful folks out there. I'm Steve Rhodes, host of the Trader's Edge, and thanks so much for joining me this morning. I am back, folks. Boy, I don't know if you listened to the show yesterday and how much energy you heard, but, you know, much like the markets, when it expends a lot of energy, it's so cool that you can correlate what goes on in the markets to what really happens in your life. And what I'm talking about here, folks, is that on Saturday, you know, I had the honor to be part of a workshop that Tom and I put together. Had just a wonderful attendance, wonderful energy level there, and the focus that I had put into to my segment in creating that was nothing more than 2 weeks of just solid work. Because what I was doing was taking truly a quarter of a century of work that I had done, whether it was things that I had done on my own, courses that I had taken, but just trying to take what I thought was the most important things to be able to help folks become leaders, to be able to help folks grow, to be able to help people overcome whatever hurdles it is that they have in life, and to be able to deal with the stuff that gets thrown at you. Now, most folks that attended the workshop know that I didn't use the word stuff, and I was kind of kind with regard to what I used, but there was so much energy that I put into it because, you know, the way you do anything absolutely is the way that you do everything. I play hard. I work hard. I live hard. You know, I mean, to me, that's what it's really all about. What I always like to do is try to find another gear and to have that opportunity to be able to share with folks my thoughts, my beliefs, ways where I know my whole objective is really to be able to help people grow, teach them, and help them achieve something a little bit beyond even what they even envisioned, if you will. And so when you put that type of energy in there, and I'm telling you, it was solid. It was nonstop. If I wasn't, you know, working for my clients to try to find a trade or what was going on in the marketplace, it was truly in preparation for the workshop that we did. And when just like a market, when a market extends itself, because I absolutely extended myself, what happens is there's all of a sudden this release of energy. Well, let me tell you, you know, Sunday was the first time I went out just to relax, just to clear my mind, get away from everything, play golf. Sunday was the first time when I was playing golf where, you know, and I was playing well, where after 7, 8, 9 holes, I was actually done. I was toast, if you will. I was ready to just say, you know what, but I was playing a great golf course. It was the Copperhead, I think the Copperhead golf course up at Innisbrook, and I wanted to play it. It's a course that the Tour pros play on, and you know, the front nine wasn't that exciting. I said, well, must be the back nine that's exciting. But my whole point here is just simply that yesterday I still didn't have the energy level, not near the energy level that I have now. A good night's sleep will help you. The Tigers beating the Yankees, that'll help you. The Bucks going on to win over Indy, that'll help you. Of course, what we need today, I think today is the next game. So today the next game for the baseball. I think it's today or tomorrow. I think it's an early game, 2 o'clock game. And so what I need is the Rays, obviously, to get in here so we've got a nice series because the next loss, and it's over for them. But they're the comeback team. So, you know, what I'm talking about here is the energy, folks, that you really put into things and the way that the market was. Well, what I'm looking at on my screen, folks, and you can watch us on TigerTV. What you do is you go to the home page of TFNN. On the third tab, you'll see TigerTV. You'll be able to see our screens live, my screen live. And you want to be able to do that because the more that you can link the known to the unknown, the easier it is to learn. And so in my case here, I'm just trying to, because I know each of you, in whatever it is that you pursue, whatever your passions are in life, you probably also put forth that same type of energy. Or you have for some type of special occasion or a presentation, maybe something that you're doing for work or whatever it might be, and that when it all culminates at the end, you know, there's just this release like, like where's the energy I just had? Well, it comes out of you. And in the market, it's really the same thing because the market is nothing more than the combined energy levels of all of the participants. And we all have patterns. Even that is a pattern. And here what we're looking at on the screen, because today's about education, always is. Today is about understanding Gartley patterns and when they fail, what happens. because we talk about it. Now we actually get to see it right in front of us. We're going to see, just by taking a look at the S&P futures contracts, we're going to see ABC patterns. We're going to see how that can be formed from a Gartley. We're going to see what happens when a Gartley fails, how that turns into a butterfly. I know that you hear me say that. We're also going to go, good morning to all the folks that have been up for a while up in Spokane. I got a nice email from one of our listeners there, from Alan, and where he was telling me that no, people aren't just waking up to me at 6 o'clock, that the folks in Spokane, they get up at 5 o'clock because there's a great show that they listen to, Ed Hanley, who talks about the Elliott wave and Fibonacci. So, Alan, thanks. He said he's not in his PJs. He's been having coffee, working away, taking a look at the markets, trading the markets. And so we're going to take a look at these patterns. Now, just to give you an idea of, as far as where I think we're at in the markets, I think what we're going to see here is a turn today. And a turn because when we take a look at all of the futures markets, we have patterns that are completing all at the same time. When you have that type of synergy, folks, look, a failure is going to mean that we're going to see much, much lower prices. Over time, we absolutely are. But what we're seeing here is the energy that's been expended, in my opinion, across all of the markets. And when you have that happen, there's not the continued energy to push down. So when we came on the show yesterday, we were taking a look at this same chart. What we were looking at, folks, is we were looking at the yellow Gartley and the purple Gartley. There was a 0.786 that occurred right at around the 7 o'clock in the morning time frame, I think it was, and that actually at 3:30 in the morning. I'm sorry, so it was about 10 o'clock at night, 7:30 at night, 7:30 at night, that's what it was. So it was about 7:30 at night on Sunday. So as I was coming back from golf, after having a nice dinner, some nice beverages, if you will, there was this Gartley buy pattern that had come online, if you will. And then in overnight trading, it extended a little bit further, almost to a move of a move, but still you had this 2.0. You can kind of see it on my screen. Maybe I'll blow it up just a little bit more. We'll just focus in just on this Gartley so that you can see that. And when you have a 0.786, which is really what we had at around 7:30 at night, what happens many times is when a 786 Gartley fails, one of the two things it's going to do, it's going to do a move of a move. And what we're talking about there, folks, is we're taking a look at swing points. And in swing points here on the ES Mini, we're taking a look at a swing point from 7:30 in the morning on September the 23rd. And the high of that was, let's see here, the high of that was 11.25. The low was 11.02. So a market coming all the way back to that specific swing point would be a move of a move. Now, sometimes you hear myself or you hear Tom, maybe Larry, others use words like rejected it or couldn't handle it. So, Alan asked me to describe that. In this case here, a lot of times when we use rejected it or couldn't handle it, we're talking about as a move is coming into a swing point. So what it is and we'll take a look at that a little bit further, maybe in the next segment or the segment after that. I don't use those terms when I'm taking a look at Gartleys or butterflies. All we're looking at is it's either a successful pattern or it's a failure. In a failure, when you have a 786 retracement, and the 786 in this case here, folks, is going from that low at 11:30 in the morning on September 23rd, all the way up to the high that it made at 15:30. So what is that? That's 2:30 in the afternoon on September 27th. When we take our retracement ruler, our 0.382, 0.618, 0.786, the 0.786 area came in right around 11:28. That's the price point, not 11:28 in the morning or evening. And when the market pulled back there, when it made an ABC back to that area, and it was also a 786 retracement, when that fails, what that sets up from a price standpoint is it still has that energy. It's like me putting together my presentation. It would have probably been like me on Friday evening, if you will. Even after we had everything set up, I was so psyched up, I couldn't go to sleep. It wasn't because I was worried about what I was going to say. I actually spent most of the evening and early morning while I was dreaming, if you will, or I was awake, with my vision of what it is, how I wanted the day to be pulled off, because I knew that if I could envision it, I could absolutely do it, which is what I try to teach folks, because it's so important to understand that, because you can manifest into your life that what you want. You absolutely can. In fact, you do it. Everything you have in your life right now is because you manifested that into your life, whether consciously or unconsciously. In this case here, when you have a Gartley pattern that fails at the 0.786, what happens is you're going to typically go create a butterfly pattern. That's exactly what we have here when you're taking a look at the ES Mini. The butterfly pattern, I'm going to go ahead and remove these Gartleys from my screen just to make it a little bit clearer for everyone. So here goes a little bit further than .786. Here's the .786 Gartley that you can see in yellow, if you will. And now you've got this butterfly pattern. Now let me just change the colors on it so we can get it nice and pretty. Let's see, what color would you guys like? How about, we'll just go with that yellow because it stands out, that deep yellow. And please watch this on TigerTV. So we had the .786 Gartley that failed, and that turns into a 1.272 butterfly, folks. And you can see that that's what I've got painted on my screen. Let me blow that up just a little bit further here. Right now, that completed right at the 1070, if you're going to be exact. And when we're trading, folks, we're not exact. We're not about perfection. We're about just simply being outstanding. Well, an outstanding butterfly here would have completed right around the 1078 area. Right now we're trading at 1078.50. 1078.06 would have been the exact number. It traded as low as, during this last 120-minute session, if you will, it traded as low as 1071. Folks, that is close enough for me. That should be close enough for you in the work that you do here. So right now, you know, for example, you've got the Dow futures are down 74, the NASDAQ futures down 8, the S&P futures down about the same. And what we have here is we have a butterfly. Now, that doesn't mean that prices can't go lower. What happens here is that if this area doesn't hold, where prices will go to is they will typically go down to the 1.618 butterfly. And let me try to pull that, see what that number is up on the screen here, because you want to know that number for sure. So if this pattern here fails, it means that there's still enough energy. It means that it's me at about 4 in the morning, because I was still awake on Friday, still had the energy because I knew what it was we were going to do last Saturday. And so that would take us down to the 1047.62 level. But all the patterns are set up right now for the markets to open lower, for there to be a bounce. We'll see what happens. 877-927-6648. Thanks so much for being here with me. We'll be right back.
Yeah, it's always better when we're together.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to thefrontoftfnn.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Don't forget, you can test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
877-927-6648. Thanks so much for joining us. Now, I just wanted to go ahead and finish up on the two patterns here that we're looking at on the ES Mini. That's the S&P futures contract. This is the 120-minute chart that we're looking at, and you're looking at two beautiful patterns that we have here. The first one in light blue is a Tiger Gartley. Not a Tiger Gartley. It's just simply a Gartley sell pattern. It's got great sacred geometry numbers. You've got this 2.618 here that you can see. This is the expansion of the B to C swing point where it completes here up this area. This would be our D, if you will. And this is a 0.786 retracement. You know, beautiful numbers that you have on this. When you take a look at the butterfly pattern, also some beautiful numbers. Really, three of them that stick right out at you. You see you got this 0.618 retracement here. That's the retracement of the B to C leg. You then see this 1.272 expansion here. This is from our point, which I call X marks the spot, all the way down to this completed D area. And what you've got here, folks, is you've got this 3.14. What does 3.14 remind you of? That's pi. Pi is typically the most that you'll see from an expansion standpoint. So when you put this with the other daily futures contracts, and you can see the patterns. We'll take a look at that. You can see the patterns that have completed. You know, this is where what we should see is just where we've had a huge amount of energy that has been pushed into the market to get to this point, and and from here there should be some type of bounce. Now, the question is, what kind of volume would be in that? Should that scenario unfold, what you'd really want to be taking a look at is what kind of volume is there. Now, when you have these butterfly patterns and these Gartley patterns, first let's go to the Gartley, because what I like to do when I take a look at exit points on a Gartley pattern, one of the things I like to do is a Gartley also sets up a new A to B equals C to D. And what I'm talking about, folks, here is I'm going to draw it in here. The A point would be all the way up at the top of this swing point. So we're looking at about 11:30 in the morning on September 20th. So that's my A point. So I'll start there. I'm going to draw all the way down to the B, which happens to be, give me a second here to get this in, which happens to be at that 9:30 in the morning on September 23rd. Our new C point comes all the way up here to the 15:30, so that's 2:30 in the afternoon on September 27th. That marks our C. A to B equals C to D. What's the price point objective on that? 1077.47. What are we trading at right now? 1077.75. So you've got, on a longer term basis, you have just completed an AB equals CD. Now what you want to pay attention to here, folks, is that if you take a look at the C to D line, that's where I'm drawing my, got my cursor going right now, if you will. You can see how price completed on the right side of that. if you're looking at it. And what that also means is that it didn't have the same energy that we had on the A to B leg on the way down. So the way that you kind of put this together is you're starting to take a look at, does it have more energy or less energy as it completes the ABC. Now you've also got a butterfly pattern that's completed here. And so you expect everything is really set up. Doesn't mean that this is what's going to happen, but this is where your back is up against the wall. You expect now, for just like me, where yesterday was kind of a little bit of a breather day, didn't have the exact same energy. I came back this morning with, I'm probably at about, my tank is probably about 90%. Tomorrow I'll be back up to the 175% that I'm normally at. And, of course, you can help me get even more up to speed just simply by giving me a call. You can transfer your energy to me. That would be a wonderful thing. Now, when we take a look at this butterfly pattern, well, where can it go to? Well, typically, from a retracement standpoint, what I always like to do is I like to go back to the original ABC that this set up. So in this case here, we'd be going back to that 2:30 time frame on September 27, taking my Fibonacci retracement ruler, drawing it all the way down to the low that was made today. And what you would typically do is you'd bounce back to the 0.382. We call that many times just a dead cat bounce. That's your first level from a retracement standpoint that you would see the market move up to. Now, the question is going to be, how is it going to move up there? And that's what you need to understand, price and volume. You want to be able to, take a look at, you should get Tom's book, The Art of Timing the Trade. That's the first thing that you should do, because it will be so helpful. There's so much material in there to understand price and volume, as you come into swing points. In this case here, you wouldn't be coming into a swing point necessarily. You would be just simply doing a retracement, and you want to see, you can take a look at what size bars as you come in there. Is it a wide range bar, or are you just coming into that 0.382 with smaller bars, if you will? If you take a look at, as we came down yesterday, on the 120-minute chart, you had a wide range bar from about 130, on. You really slowed up as the market closed, as we got into the 530 area. You can see as we came down this morning, the bars are starting to get a little bit tighter. The bulls and the bears are fighting it out. And when we get back, folks, we'll go take a look at the market. It opens in about a minute. And 877-927-6648. We'll be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. Thanks so much for joining me. And we're off to the races. The market's open and out of the gate. You got the Dow. It's down 125. The S&P's down 14. The composite down 22. The small cap's down 5. NDX down almost 20 points. And gold. Let's see. What's gold? Gold down $3. Silver down 41 cents. Light sweet crude down to $1.62. Now, when we're taking a look at, I just want to go ahead and finish up here on the ES Mini 120, and we'll follow up on it tomorrow, and we'll see, what it does, what I would expect if it bounces from here. So if these lows hold, what you'll first see it get up to the 0.382. Now, the 0.382, you've got the range. If you're going to take a look at the range, what you want to do is you want to take a look at the 0.382, as we talked about, from the very high, from that A point, which again was at 2:30 in the afternoon on the 27th, all the way to the low that it made this morning. That price comes in at 11.16. You also want to take a look at the other swing point, the CD leg, if you will. So the high on that was at 11:30 in the morning on September the 29th. The high there was 11.70.75, all the way down to the bottom. That 0.382 would take you to the 11.09. So the range that you're looking at, if there's a bounce from here, would take you up into that area. You'd want to take a look at and see what type of bars as it would move into there, to give you some type of indication whether or not you'd see a retracement, and then maybe a push up to that 0.618 area. And that 0.618 range that you'd be looking at is about 1132 to 1144, and that's on the ES Mini. That's on the 120-minute chart. If we switch over here just simply to the 4 futures contracts, and you can see all of them on my screen, if you will. And so I'm just going to kind of keep this so you've got a picture of the 4. And it's important, really, that you correlate what's going on in the markets, because what you like to see is some type of synergy. You don't always have that, but you like to see some type of synergy with regard to patterns that are completing. In our case, we like to look for AB equals CD patterns. Those are always nice because when you get to a D point, you're typically going to do something else. So you'd either buy or sell on a D point. If it's moving down, you'd be buying. If it's moving up, you'd be selling or putting in your trailing stop or your buy stop. And if you take a look at the Dow futures, which is up in the upper left-hand corner, if you go over to the swing point from September the 1st, the high there was 11,705. 11,705, that's the high. The low on the futures contract came in on September 12th. The low there was 10,695. That was the B point. The C was on September 20th at 11,475. 1 to 1, A to B equals C to D is 10,465. Where's it trading right now? 10,461. You got to like that. And then if you go over to the left, what you'll also see is you'll see the August 9th area. And what we've done is we've made a move of a move. The low on that, folks, is 10,401. Well, we got down to, let's see, the low in overnight trading, we got down to, you're going to love this stuff, 10,401. That's a move of a move. You want to understand that. You want to pick that up from the art of timing the trade. Now, what you would look here, when you do that, when we're taking a look at, Alan, we're taking a look at terms such as rejected it or couldn't handle it, you'll be taking a look at the volume as it comes into that swing point. Because that August 9th low, that move of a move, you're taking a look at the volume. You're correlating the volume there to the volume as you're coming into it. If you get down to that price point, in this case here, it got down to it exactly. You'd like to actually see it just be maybe a penny below it, but we'll take this. And you don't have enough volume there, and it rejects price. That's what we mean by it rejected it. It's really the same terminology. It couldn't handle it because it was coming down and wouldn't have the volume behind it. And we'll take a look at that when we go over to the ETF structures, during the show now or perhaps during the 9:30 show. And you want to stay tuned, folks, because a great lineup today. After this, you've got Tom and I and the Money Masters, and I'll follow up one more session from 11 to 12. Then Don Kaufman, Ken Shreve from 3 to 4, and Tom will take it home. 877-927-6648. We'll be right back.
Well, it's always better when we're together. Yeah, it's always better when we're together.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real Money Masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. Let you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by South American Silver Corporation. For more information, just click the South American Silver Corporation banner on the front page of TFNN.com.
it's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back, 877-927-6648. And you got the Dow down 155, S&P's down 15, the NASDAQ down 21. And, folks, you know, I do a newsletter subscription service called Mastering Probability, and it's absolutely something that you want to check out. And I'll say that, you know, especially on a day like today, and I got the Dow down 156. There's a stock that and my clients are in, our subscribers are in, and it's green today. And this thing has, it's such an ideal chart setup. You know, if you put a chart in front of somebody, you know, this is a book. If Tom were writing his book today, this chart would absolutely be in it. You know, my service comes with a 30-day money-back guarantee. That means for 30 days you get access to me, my thoughts from a trade standpoint. You get the Mastering Probability, the position size calculator with it as well. It's a calculator that I've created, more than a calculator. It's a system, because there's nothing that will impact your trading more than having the proper position size. And you really want to get your head totally wrapped around that. I know your focus, you know, is on patterns, is on entry points, is on exit points. You've got to understand position size. It comes, you know, it's free. All of my subscribers get it, and would love for you to test that out. All you got to do is go to the newsletter section or on my name on the homepage of TFNN. Put down a credit card for 30 days. You can see the ticker on your screen, exactly how many days you've got left each time that you log in. You'll see the trades. You'll see our past trades. You'll see what we're in right now. You'll see this stock, which you absolutely, in my opinion, it's a great reward to risk. You know, the market being down the last 3 days. Friday, yesterday, down 165, the Dow down 165. This thing is green, and this thing is potentially a little rocket ship. So you just simply want to do it from that standpoint. Now, again, what I've got up on my screen here, and, you know, I know it's a little bit small, but I just wanted to show it to you, you know, where the 4 futures contracts. You've got the Dow, the NASDAQ, the Russell 2000, and the ES Mini. And you want to do the same thing. You want to do the same thing in overnight trading. You want to see patterns that are coming together. In this case here, we showed the Dow making an AB equals CD and doing a move of a move. On the ES Mini, you're looking at 2 AB equals CD patterns that completed. The first one was a 1 to 1.272, and then inside the CD leg, if you will, we're seeing another A to B. So you got 2 ABC patterns completing, also a move of a move. If you take a look at the NASDAQ futures, it actually made a Gartley buy pattern. You've got this 1.618 expansion of the of the BC point, which came in at the D level. So you've got a Gartley pattern that's setting up, and you've got on the small caps, you've got a butterfly that has formed. It would be nice for the small caps to push down just a little bit further. That pattern would complete right at about the, looks like around the 590. Can't really read it. Looks like about the 592 area. It got down to a low at, let's see, 597. So, you know, to a certain extent, it's completed. So you've got 4 patterns with regard to the futures contracts. And now, not that this area can't get busted. That's why you want to be able to understand the power of 1%, and what it is that you're trading. Because when these patterns fail, you know, what they tell you is much, much lower prices are coming at you. But this is an area where you really want to consider with your back up against the wall because of the information, or you want to sit on the sidelines, wait for some type of confirmation for you, you know, before you would put your money in harm's way. But when you do, you want to make sure you understand that power of 1%, of how you risk 1% of your trading capital, because when the patterns fail, you live for another day. You know, and that's what mastering probability is all about. That's what money management is all about, because you're never going to get 100% of your trades. You don't need to. In fact, you know, one of the things that we did during the web workshop, and I've shared this with you before, but I'm going to go ahead and pull it up on the screen, is you want to understand your trading. You want to understand your distribution of wins and losses. This here is a trading distribution of 50% wins and 50% losses. Now, in this case here, if you're playing the triples, and we know that I've got so many listeners out there that play the direction share ETFs, it's much easier to risk $100 and make $300. Now, when you really understand risk and the money management piece of it, it's pretty easy to only lose that $100 if you use the proper position sizing. Now, folks, because you play those ETFs, oftentimes, especially with the volatility that you have in the marketplace, what happens is you will see your stops get jumped. That's what I call the uncontrollable loss. The controllable loss is when you put your stop in place and you actually get taken out, you let it get taken out. Maybe you adjust it so you have just a little bit more than what you control because of your risk assessment. But the bottom line is you have a series of wins and losses. Now, on a 50-50 chart here, which people, plenty of traders are out there like, geez, that's like flipping a coin. That's like throwing a dart, if you will. Well, if you had the proper position size and if you had the proper money management strategy in place here, this one gives you a positive expectancy. That's what you want in life, in anything that you approach in life, whatever it is that you're dealing with. You want to learn the system so that you have a positive expectancy. Well, if the way you do anything is the way you do everything, this is how I do everything, folks. I have a positive expectancy on life, no matter what gets thrown at me. I also have a positive expectancy on the trading system. That's why I trade the Gartleys. That's why I trade the butterflies. It's why I understand swing point volume. Those are the things that you want to understand. In this case here, this type of system would give you an 0.8 expectancy. Well, folks, what that means is if you had one trade every week and you took a nice 2-week vacation, where'd you go to vacation? I'd say go over to Lanai, Hawaii. Go check out, that vision, that Steve's perfect spot to, go take a look at Maui in the background and this great little rockets out there. And, folks, if you did that here, you'd get a 40% return. What if you only had 25 trades? So you vacationed often. Well, in this case here, 25 trades, you'd make 20% on your money, folks. So, you can be conservative, if you will, to wait for the exact setups before you go ahead and put your money at risk here. And on 20 trades, folks, what you're talking, or 25 trades, you're talking about 12 and a half winning, 12 and a half losing. You can make 20% on your money. I want to be able to teach you how to play the direction shares the 3 times, folks, and I want you to do it in the right way. So do yourself a favor. Go over to the homepage of TFNN. Check out my newsletter. You've got it for 30 days for free. You're going to see another nice trade. In fact, that stock I was telling you about, folks, up 26 cents right now. That's on a $3 stock, friends. Anyways, 877-927-6648. We get back, we'll go take a look at the ETFs or anything else that you might like if you give me a call. Again, 877-927-6648. So great to be here with you. Dow down 177, S&P's down 17, and we'll be back in just a few.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before October 15th from your local Barnes & Noble store. And you will be given access to not just 1, but 2 exceptional archived courses. Tiger Scaling, the Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for a cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore, and we'll be sure to work with them to keep your purchase local. So let's support our local businesses, keep money in your community, and get a great education. But be sure to act now, because you only have till October 15th to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I'm very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York Stock Exchanges under the symbol GBG.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. Thanks so much for joining me this morning. They got the Dow down 220 now. S&P's down 22. Composite down 38. Now, and everything is serious. I take everything, like to make it on a personal nature, if you will. And one of the things that, I've been screaming from the top of my lungs, if you will, is really for the 70% of folks that are out there invested in mutual funds. Now, 70% of people own mutual funds. They're in their retirement accounts. Those of you that are fortunate enough to be employed, working, have your own company, most of you have some type of retirement pension program that you're contributing to, and you typically have that, your money's being managed by somebody else. It's typically not self-directed funds, and those funds are, in a huge basket of 8,500 mutual funds. Amazing. 8,500 mutual funds, but a huge business, huge industry, and one of the things that I have been pointing to has been the NYSE on a weekly basis. If you've been listening to the show, that I've been looking at that because there was a hammer candle, and this is something else that we want to teach you. We do workshops, webinars on this information, and we want to be able to teach you our language, the chart language, if you will, the art that we have out here, because there was a hammer candle that was formed on August the 12th, and I have been literally screaming to folks, find ways, make sure you understand how to pull the trigger so that you can go to cash, because the last time that this hammer candle was violated, if you will, goes back to the time frame of September 19th, 2008. That was the last time on a weekly basis on the NYSE that you had a hammer candle come in. And you can see that when we broke that, we actually broke that, not we, but the market broke it on September 26, 2008. And the move that you had made from the highs of the market all the way down to the bottom of that candle, if you took a look at the exact same measurement from the bottom of that all the way to the bottom of the market, that's what came in. So what that says to us right now, because you've broken that, you broke that the week of September 23rd. It got confirmed last week. You can see this week how we're trading much further below that. And if you're in a mutual fund, folks, most people you can get out by the end of the day. Even if, we talk about the market bouncing and patterns and so forth, the longer-term standpoint, folks, is that we are in, the worst bear market possible. And so you want to be able to take those, you want to be able to take that and and protect yourself. Let's go to Larry Pesavento. He's on the line. Larry, thanks for calling in.
Hey, Steve, I just want to reiterate the importance of what you've been talking about here. This is a real serious situation.
Absolutely.
And, we have some, targets down there around 1020.
Yes.
In the S&P. We could be there today, but we don't have a big cycle date until Monday the 10th.
Right.
And I would really, tell folks that even that will probably be just a bounce of some kind. The problem that I've been talking about for a while is it's not the United States, it's Europe and Asia. And if you just take a look at the Hang Seng, which is Hong Kong, which is the Switzerland of Asia.
Yes.
I mean that stock that looks like a 29 crash almost. It's well, not quite that bad, but it's getting there.
Yes.
And it was down another 600 points last night, which is now equates to about 5%. And believe me, people are even concerned about their real estate investments over there now, and if that ever transforms to what happened in China, and then that goes into Hong Kong with the real estate stuff, it's a liquidity thing, because you can't get out of real estate. You can't get out of real estate in 3 seconds.
That's right. That's right. But you can't get out of the market, and that's what happens. It's because we were in a major liquidity event. And folks, what Larry's talking about last night, the Hang Seng finished at 16,250. What it's telling us, it wants to go to 14,264 next. So it'll keep putting pressure on. Hey, Larry, thanks for calling in. Our listeners love hearing your voice. So do I. Folks, stay tuned. You got Tom and I at the Money Masters, and then I'll be back from 11 to 12. Thanks so much for being here with me, folks. We'll be right back. 90, the S&P's down 3, composite up 14, the small cap's up 6. I'm going to guess that by the time we're off the show here, it's all going to be green. Pretty amazing. Now, what I've got up on my screen is I've got 4 little windows. It's the futures contracts. We were taking a look at it this morning, taking a look at the patterns here. So we're just simply going to follow up on that to take a look at what's really going on around the world, what's really going on in your world and our world. And, I love those big slobbery kisses. You can give me one of those big slobbery kisses. Just give me a call at 877-927-6648. Would love to hear from you. I'd love to take a look at, any chart it is that you want to look at. And, again, what I was showing in the 9 o'clock hour this morning, when you came in, when you were turning on, CNBC, before you turned on TFNN, because this is really the financial news network that's out there, what I was doing was giving you the picture of, hey, folks, look, what we've got setting up here is you've got patterns that are setting up inside the 4 futures contracts that are telling you that there should be a bounce coming. Doesn't mean that that's what's going to happen, but your probability when you had that type of synergy in the marketplace, it was telling you, it was like a bounce is coming. Just the same thing as for everybody that's out there that's got their money in their 401k plans, inside their retirement accounts. So I feel like I've been riding the horse telling you, go to cash, go to cash, go to cash. Maybe let me say go to cash, okay, because what you're in here, because the New York Stock Exchange has broken through that hammer candle. It's telling you that lower prices are coming. You're not in a position to be able to play a bounce, be able to get into, an ETF today and then maybe be out by 3 o'clock because of some other pattern that's out there. We're in a terrible bear market. You don't have to write it down like you did from 2007 to 2009. We don't want you to, because if you are in cash, look, when the market turns, when it's time to be bullish for a longer-term standpoint, then we'll tell you. Or certainly subscribe to one of our newsletters so that you can get a better feel for the market as well. Maybe you're able to trade those, on some type of intermediate term basis. But, we want you to protect your assets. We love these patterns. We love swing points. We love Gartleys. We love butterflies. We want you to love them too. Mostly, we love you. Now, when we're taking a look at these patterns and all the setups here, you can see that if we just simply, let's go to the small caps, all right, because that's the first one that gave us some kind of signal this morning, because that was actually the first one to turn green. And it set up I'm going to go ahead and blow this up here on my screen. It set up a butterfly pattern. Yesterday when I was doing the show, I was talking about how the small caps were going to give us the biggest signal, and to be watching the small caps, because when the small caps busted through the lows from August 9th, and the low there on the Russell that we were looking at was 623.70. When it busted through that area, it was sending us a big signal that there were lower prices that were coming at us. And the nice thing is that what it did was it stopped, in essence, at the butterfly pattern. Now, that butterfly pattern was somewhere right in the 692 area, 693. What it got down to a low of was 597, maybe it was 592. I got down to 597. That's close enough for our type of work. You had multiple ABC patterns on the Russell as well. You had an ABC that started out on September 6th. The high there was 715. The B point on that came in at September 22nd. The low at 629.70. Then it moved up for 4 days, moved up to the high of 692.10. That was on September 27th, and a 1-to-1 came in at 606, and traded just below that. Right now, you're trading at 617. So that was your first indication there as that moved, as that butterfly pattern was working. Then, if you go take a look at the other, you had the Gartley buy pattern. It was a 786 Gartley that completed on the Nasdaq. And the cool thing about that is the 786 retracement on the Nasdaq actually turned out to be 2,049.34. And what does the Nasdaq get to? 2,041.50. It's a beautiful thing when you have these patterns that work out. It was just above a 1 to 1.272. A to B equals C to D. Now, again, as Tom and I were saying on the Money Masters show, unless there's any kind of real significant strength that comes into the market, and that's where you'd want to go take a look at the ETFs. This is likely just a bounce. So, if this is just a bounce and you haven't done anything to find out what it is that you need to do to go to cash inside your retirement accounts, please do that today. Please take advantage of that today or tomorrow, and certainly, feel free listening on the show. We're going to see what that next signal is. That next signal is going to be based on a retracement pattern that we do, and based on volume, and based on coming into a swing point. But, you would be so much better off. You would be sleeping easy at night to know that from the lows of 2009, you fought back all the way to the high that we made in May of this year, 2011. And what we don't want you to do is we absolutely don't want you to be riding that back down. We'd rather you be in cash. What you are going to see is you will see a stronger dollar. And that'll, look, you want to buy when things are on sale. Things are going to be on sale, and you don't have to worry about missing the sale because it's going to be around for quite a while. If we go take a look at the other four ETFs, not the ETFs, but the futures contracts that were out there, what we saw on the Dow is we saw the Dow made a nice AB equals CD pattern. That completed at 10,461. You hit that the first time. You hit that on September 23rd. Then we came back and we completed another ABC pattern. Let me just go ahead and draw that in here. And that pattern completed this morning at 10,366. And the ABC that you'd be drawing there, folks, you'd be going to the September 20th high. That was 11,475. The low that we put in here, actually I didn't draw that right. Let me... Give me a second here to delete that and redraw that. So again, we're going from the September 20th high down to the low where we made that low at 10,469. That was done on the 23rd. Then we made the high on the 27th. A 1-to-1 would have brought you to 10,283. It traded down to 10,328. Didn't have enough juice to completely finish that off. Why didn't it have enough juice? Because it was going against that August 9th, that big volume bar that we had out there. But so far, it has rejected that. And what we mean rejected that is it can't push down. It went down. It tested the low. And it just simply is rejecting that price. Right now, you've got the Dow down 86 and the S&P down 2. We'll see the S&P go green here in the and why will we see it? Well, let's go take a look at the futures contract on the S&P. That's the last one that we have out there. That's the ES Mini. And on the ES Mini, you can see that what you've done here is you've gone and you've tested that August 9 time frame. You can see we did that during the morning session, early morning hours. Got down to a low on the ES Mini. Got down to a low of 1068, trading at 1089 right now. And where would that likely trade to? Well, just simply a 0.382 retracement, which is the first level you'd want to take a look at. What you're looking at the ES Mini contract getting to 1114. Okay, you don't trade the futures, so how does that correlate to anything that you've got on your charting system? Well, what you do is you go over to your ETFs. That's probably the next best way for you to take a look at what you've got there, because there you're going to see some volume patterns. So we just left the ES Mini. Let's go to the SPYs here real quick. And if we go to the SPYs, Now, you can see on the SPYs what you did was you came through that August 9th area, and the low on the on August 9th was on the SPY was 110.27. You did 709 million shares. When we came through there yesterday, you came through there with a total of 364 million shares. So you've got 364 million shares going against 709. Yes, you extended yourself down there. It was good to be able to correlate what was really going on in the futures marketplace, what was going on here. Now, what you want to see is you want to see the SPY get back into the range. What I mean by that is you want to see it get above that low from August the 9th. Again, that low is 110.27. You're trading at 109.68. It got up to a high so far today of 109.94. You want to see that finish the day back inside that trading range. That trading range that we've got here, folks, is basically from the low of 110.27 all the way up to about the 122 area. And so that's what you want to be looking at next on the ETFs. If we go over to the small caps, so let's go to the IWM. If we go to the IWM, we take a look at that. You can see the butterfly pattern that we have there. Again, it was a little bit more than a 1.272. What you'd see here, where that would likely bounce to, folks, is first you're going to run into the swing point on September 27th if you can get enough juice to get up there. And the reason why I say that is because on a butterfly pattern, when you have that pattern, what I like to do is I like to draw the retracement from your A point. In this case here, that's the August 31st high on the small caps. That high was 73.89, and you're going to go all the way down to the low that was made on the open this morning. Well, the 0.382, if I can get that in here, let me see here. Yeah, okay, that's already drawn in there. So the 0.382 area is 65.36. You're trading at 61.88 right now. And when it gets into that area, you still won't have hit the swing point. But the first area of volume, the first area of resistance that you might see actually happens to be the September 22nd bar. That September 22nd bar has 159 million. So just watch as you're coming into that. But the real war, if the market has a nice bounce from here, what you do is you'd see the small caps get up towards the 0.618 area, which is $68. But the swing point that you'd be coming into is on 9/27, September 27th. It's got 93 million shares. As the small caps would get up into that area, it would release a lot of information. But you're first going to have to clear that September 22nd time frame. You're first going to have to clear 65.36, which is the 0.382. If we go take a look at on the ETFs, let's finish this out before we go to break, and then we'll go to our callers. And thanks so much, for calling in. I love hearing from folks. If we take a look at the diamonds, and we take a look at the diamonds again, yesterday we didn't get down all the way we didn't bust out the lows from August 9th. We did that. We saved that up, or the market saved that up for this morning. Now, the volume you had there on the diamonds was 32 million shares. Yesterday, you were coming down to the low of that. You were coming down into that with 13.5 million shares. That was telling us, hey, yeah, lower prices are coming. The NYSE is screaming at us. So I don't want you to misinterpret anything I'm saying. We're talking about, when I'm looking at that NYSE, the longer-term aspect of what I want you to do to protect your capital. When we're going in and taking a look at these ETFs, we're taking a look at a shorter term, a daily chart, and exactly what the market is doing, just understanding the breathing pattern out there. So thanks so much for being here, 877-927-6648. We get back, we'll go take a look at the euro with Peter, and then we'll go to Costa Rica, take a look at Yahoo. We'll be right back, folks.
Yeah, it's always better when we're together.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before October 15th from your local Barnes & Noble store. And you will be given access to not just one, but two exceptional archived courses. Tiger Scaling, the Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for a cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore, and we'll be sure to work with them to keep your purchase local. So let's support our local businesses, keep money in your community, and get a great education. But be sure to act now, because you only have till October 15th to take advantage of this opportunity. Go to the front page of TFNN.com for details. TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG. X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about TigerTV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your TigerTV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the TigerTV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
TigerTV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back, 877-927-6648. Thanks so much for joining me. We got the Dow down 135 right now. S&P's down 7. Composite up 15. The small caps leading the charge here, up 9 points. The NDX is up 10. Let's go to Peter in Park City. Peter, thanks so much for calling in.
Hey, Steve. Thanks so much. I appreciate all you all do. Hey, I was actually, this morning was pretty obvious in the early hours that this market was going to bounce when you looked at the euro.
Yeah.
You had all the futures down huge and the euro was flat.
Yeah.
But I there's so many swings, et cetera, that I try to look through the bigger swings to get a bigger picture of what's going on. I wanted to walk you through kind of my analysis and see what you thought.
Okay, cool. Okay, now where are you going to start?
I'm going to start on June 7th, 2010 at the 118.74 low.
June 7th, 2010.
Yeah, it's 118.74
Perfect.
is the low.
I'm there. Got it. 118.74.
We ran up to 142.76.
Yep.
Okay, we pulled back.
Yep.
Then we did a 1.272 within 4 ticks at 149.29.
149.29. Okay.
That was
okay. I see where you're going. I got it. I got you. Okay. Yeah.
Okay. We pulled back to 138.11.
Yeah.
Okay. Now, from there, we did a 1.272 extension down to the 135.08.
Okay.
Then, when that failed at 135 after the meager .382 bounce, we went to the 1.618, which is taking us basically to this morning, even though it was 131.23.
Right.
Was the extension.
Right.
We got to 131.42.
Yeah.
But and again, I'm looking at the big swings. So right now, the 118.74 and the 149.25 are the true big swings.
That's the real key area. And where he's going, folks, is he's going from the low to the high or the high to the low, however you want to take a look at it. Okay? Absolutely. I agree. That's how my chart's laid out, too.
So as I look at this, and I do use Basil's waves a bit, so today would be a trough E.
Okay.
And if I look at this, obviously we're getting a little bounce here, but I still look at the 0.618 of that overall move coming in at 130.39.
Absolutely. I agree.
Which would then set up, probably a trough F, which then we'd actually get a legitimate bounce out of here in the euro, which would make sense. You go down to the 130 area and reverse.
Yeah, look, there's no question that the points that you've identified, are absolutely key. And to me, when I was taking a look at the futures contracts this morning, that the real wild cards out there were the euro and the dollar index. Now, obviously, the dollar index, because 60% of it is the euro, so it was really the focus on the euro. And that 0.618 area that you've identified, that 130 range, from the bottom to the top is really key. And then, I just simply go up to the next swing point, Peter, which is around the August 24th time frame. Well, that's a real key, as we know, because number one, August 24th, August 25th were two real big astro cycle dates. We had, probably that area there is probably the most to be watched. It was also happened to be QE2 came out a couple days after that. So you really want to watch that. You want to draw any of your retracements and expansions off of that as well, okay?
And that's the 128.70, right?
Yes, exactly. Yeah. Okay, and so you really, on all your charts that you're looking at, you really want to be paying attention to August 24th and how, an equity, an ETF, a currency is coming into that time frame, because from an astro standpoint, it really was an important area. And when those lows are taken out, it's really giving you, a very important signal. Now, the reason, so I'm also drawing a retracement from that low up to the high, the 149 area. Mm-hmm. Yeah, well, the 786, the 786 comes right in there at that 130 as well. So now you've got a 786 and a 618 right in that 130 range. And then if you just simply go up to, then you can start off of major swings, just start taking expansions. And there happens to be an expansion off of the swing from February 14th. That low there is in the 134 range, and a 1.272 expansion from that swing low all the way up to the top puts you right in at that 130 range as well. So that 130 should act as a real magnet where you should see a reversal. And you're talking about.
If you don't.
Well, yeah. If you don't, then that's absolutely going down to that August time frame. 125-ish area. And but it's cool how you're able to take this, and you said you're using Basil's Chapman wave. How you're in a trough E right now, right? And the confirmation on that wouldn't come till tomorrow, right?
Right.
Yeah. So you've got this thing pegged great, and thanks for giving our listeners an important lesson on how to be able to take a look at this and put it all together.
No problem. Thanks.
Okay, thanks for calling. Folks, when we get right back, we'll go talk to Kay Rico in Costa Rica. You two can get in on the action, 877-927-6648. Love to hear from you.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your Gold Report today with a free 30-day trial subscription, log on to tfnn.com or call our office directly at 877-518-9190.
Are your cable rates rising? Tired of being pushed around by your provider? It's time to push back. Cut the cable and get Dish Network installed with absolutely no equipment to buy. Here's the best part. Packages start at just $24.99 a month for an entire year. That's right. Call now and get Dish Network installed free. Plus your choice of HBO, Cinemax, or Stars free for 3 months. If you call in right now, Dish Network will also throw in free HD for life. PMG Dish, a Dish Network authorized retailer, is waiting for your call and can have you watching TV as soon as tomorrow. Call 800-565-8010. Imagine all your favorite movies, sports, and shows in crystal clear digital quality for far less money, and you won't have to deal with the cable company anymore. At only $24.99 per month, they're practically giving it away. Call now for full details. Call 800-565-8010. That's 800-565-8010. Again, 800-565-8010. Limited time offer, prices, packages, and programming subject to change without notice. 24-month agreement required. Cancellation fees, auto pay, and paperless billing and other restrictions apply. Call for details.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. And you definitely want to stay tuned. We got a great lineup. You got Don Kaufman, absolutely the best options hour, uninterrupted by commercial. It's commercial free, if you will. And that's from 12 to 1. Then Ken Shreve, come on back to us at 3 to 4. Listen to Ken Shreve, Ultimate is Breakout Investing. And then Tom will take us home from 4 to 6. Let's go to Kay Rico in Costa Rica. Sorry about that. Kay, how you doing?
Okay, actually, I'm in Florida today.
You are? Now, when are you going back to Costa Rica?
In 10 days.
Oh, okay. Now, how often do you come back and forth? Is it like every couple of months, or?
It depends, actually, right now, because I have to help my mom.
Ah, okay.
She passed away recently.
How's she doing?
She's very sad.
Yeah. Go get some. I mean, it's a tough time. You know, loss is a tough thing to deal with. And but you know what you got to work on is just trying to help her change her pattern right now, whatever that is. You know, hey, Florida's a great place. You got nice weather, nice sunny skies. Of course, it's probably you're down in the South Florida area right now, right?
Yes.
Yeah, so it's a little bit warmer down there. You haven't had the break that we've had up here in the central part, and I mean we're getting.
I can't complain. The weather's been pretty nice. I don't mind hot weather. I've been in hot weather all my life.
Yeah. Well, go get your mom some great comedies to watch. Make her laugh.
Yeah. Oh no, I got her watching 2.5 Men on all of it. She just loves that show.
Oh, now, do you like the newer version? Without Charlie Sheen, or
no? But I just enjoy laughing, and that's my healing too. So
yeah, for sure, laughter is a great way to totally change your pattern, and totally change your whole state. I've only watched a couple of those segments, and I love all the reruns of 2.5 Men and the older one, with Charlie Sheen. And but this new one, I haven't really. I wonder how long it will really last. And I know
there's big numbers. They got big numbers watching. I know that.
Oh, do they? Okay.
Oh, they got 50 million people.
Well, it must just be me, but it hasn't struck me as being. I don't know.
Oh, I agree.
Yeah.
Not resonating like Charlie Sheen.
Yeah, absolutely. So you wanted to look at Yahoo. What are you doing here? Are you in it?
I'm looking at RIM or Yahoo because there was news about RIM today.
Okay.
That White Knight might be looking at them, but could you do RIM?
Yeah, I can. I can do anything you want. And give me a second here to pull it up here. And now you're buying this based on a potential takeover. That's what you're looking at. Is that?
I'm just looking. I don't want to tell you I'm buying because I'm really not.
Yeah. So let me just get rid of a couple of things here on this RIM chart. You talk about companies that have just been, decimated, if you will, not being able, and it just shows you just the importance of being able to totally stay focused and stay present, and not getting too far ahead of yourself. I mean, it's the way it is in life. It's the way it is in trading. And what I'm talking about there, folks, is, RIM was trading at $150, $148 a share on June 20th, 2008, or the week of June 20th, 2008. You can buy that guy right now for $21. I mean, that's you talk about a major. So what are we looking at here? Boy, it is at its lows almost. Oh, it is. My goodness, this thing was trading at $21 in 2006.
Yeah.
Holy cow.
Got to put the past behind us.
Holy cow. Well, the first problem you've got with RIM is, let me see if I can put in the weekly volume here on my chart. So the first thing that you've got to take a look at on RIM is you're trading below the low of the week of August the 12th. You did 125 million shares. The low there was 2160. You went down through that on 127 million shares. Stay with me through the break, and I'll take a look at RIM, on a weekly and a daily, and maybe go dive down inside it. And folks, you too can get in on the action. Love to hear from you. 877-927-6648. We'll be right back.
Okay.
Say on. Okay.
Yeah, I'm with you. I got to talk to you about the mission.
Yeah, it's always better when we're together.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by South American Silver Corporation. For more information, just click the South American Silver Corporation banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. Thanks so much for joining us. You got the Dow down 140, the S&P's down 8, Composite up 8, the small caps up 4, and we're going back to our man K. Rico in Fort Lauderdale today. We're taking a look at RIM, the ticker symbol RIMM. So on the weekly chart, the first thing that we were looking at, K, was that the low of 2160 is the swing point. You did 125 million shares there, and when you came through that, you came through with 127 million shares a couple weeks ago. Last week, 115 million shares. Then we go ahead and take it over to the daily time frame, and on the daily time frame, what you can see is you can see where you've got some funds that are unloading here, and the last unload, if you will, came in on September 16th, 103 million shares. It gapped down, closed the night before, folks, at 29 bucks and change, 29.54, and it gapped down to the open was 22 bucks, 22.29. Boy, that's about a 30% haircut right there, isn't it? And what you've got is you've got some funds that are unloading. Well, that fund or funds or relatives of those funds did some other unloading on June 17th. They unloaded with 113 million shares that day. That one gapped down, closed the night before, if you will, at 35 bucks, and that thing gapped down the following day, opened at $29. There's another 30% haircut, on a stock that continues to get kicked, if you will. And so now there's some press out there, if you will, I guess, that says that maybe there's a buyout. Now, here's the thing when you take a look at...
Not a buyout, but somebody looking to give them options to how to improve their situation.
I see. Okay. So now, if you look at the September 16th date, the low on that is 22.52, high of 24.60, 103 million shares. What we did today was you came into that low, if you will. Again, the low we're looking at is 22.52. You got up to a high of 22.49 before it pulled back. And what you're seeing is folks that bought in that day and are just saying, geez Louise, I bought in at 22.52 and just want to maybe get my money back. Now, if you dig down, here's the cool thing, because when you take this and we just go down to a 10-minute chart and take a look at maybe the press release that came out. Was that a press release today or yesterday? Do you know?
This morning.
This morning. So somebody knew about something yesterday. Let's see, when is the 27th? So September. Let's skip September 27th. There was a different press release apparently. This one here this morning at 9:50. What you saw a spike in RIM. You had on the 10-minute chart 5.2 million shares. We had wide price spread from the time that it woke up out of bed this morning. It opened right around the 2026 level. got all the way up to 22.49, and now it's backing off, trading at 21.17. You know, if you were going to step in and you were going to just maybe trade this as a day trade, you'd let it come all the way back to the 26 area, 20, you know, somewhere just above that. But, you know, every time, if you take a look at the last time that they had what would look like to me like some type of press release, some type of big buy-in, it would be on September 27th. You have a similar thing, okay, where it didn't open up here, but at the 10:30 time frame, you had 8 million share, come in, and low on that was $21. The high was around $23. You know, traded all the way down to this $20 and change area. So I think there's, if you wanted to go ahead and play that, you'd put your stop somewhere underneath today's low, and you'd expect to see, when it comes back to that breakout area, you'd expect to see another sign of strength. You know, what happened with the September 27th time frame is you had one sign of strength, and you never saw another sign of strength all the way back down.
Okay.
Does that help at all?
Okay, sure.
Yeah? Okay.
I've been looking at Yahoo, too, just from the standpoint of, you know, this thing is totally beaten down, and there is talk of somebody maybe coming in from China or something to do with, you know, that group of whatever it is from China.
Yeah, well, I like Yahoo better than I do RIM.
Me too, actually. Yeah.
Yeah.
I do.
You know, Yahoo's got some problems, though, folks, and that is that, you know, it's trading the March 9 area was around $12, and Yahoo traded down as low as $11 in August. Right now, it's trading at $14.20, so it's still kind of, you know, back in that area. Now, what Yahoo did was made a really nice ABC pattern. And the pattern that I'm talking about here, folks, is starting on August 9th. The low is $11.25, and K-Rico, what it did is it ran up $2.89 to the week of, or the day of August the 30th. The high that it made was $13.98. Then it backs off. Looks like it only does probably a 0.382 retracement. Backs off to September 6th. Low is $12.45, and then it gaps up. Gaps up with 77 million shares, not bad. And what it does is it goes ahead and it completes the ABC pattern. Now, when it crosses the B point, and that B again was August 30th, you did 29 million shares. When you crossed it with 93 million shares. I was quite surprised to not see it get beyond the $15 and 30-plus cent range that it did. But then, folks, if you go over to the left side of the chart, and I'm going to pull that in right now and take a look at it so you can see kind of the turbulence, if you will, that Yahoo's up against. The turbulence is going all the way back to the October 13th time frame, where you had 50 million. The October. Let's see here. October 15th, you had 58 million shares. The day before that, you had 50 million shares. And what happened is you got really right to the top of that area, or very close to it, and you've got people that are taking their profits. So you finish that, even though you came through that B with substantially more volume. Once you got up there, you know, you had some folks that were taking profits off the table. So on this one here, you know, I think what you have to do is you've got to be careful. There's still a gap that is open, and that's the gap from that September 6th to the September 7th time frame. Now, another way to take a look at that gap is it's still relatively strong, because when Yahoo retraced back on the last week on September 29th, it pulled back with 45 million shares. It was going into 77 million shares. Then the next day on the 30th, pulls back with 30 million shares, lighter volume, still closed below there, but then, you know, yesterday in a down day, it moved up. Today in a down day, you know, got the market down 120. It's still up at the 1426. You know, it's a much, much better looking chart than that RIM chart, but there's definitely some sellers still in here.
Yeah.
Does that help you?
Yeah.
Oh, perfect. Hey,
thank you.
You bet. And K-Rico, my best to your mom. Get her some good, funny, My Cousin Vinny. I love My Cousin Vinny. That's always a good one as well. Folks, we'll be right back, 877-927-6648.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today. Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at tfnn.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of tfnn.com and order Mastering Probability. It'll change your life forever.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. We're cruising into our last segment, and please stay tuned. We've got the greatest option show on the earth up next. It's Don Kaufman. That'll start at about 12:06 and run till 1. And then at 3 to 4, Ken Shreve will be the warm-up band for Tom, who will take us home from 4 to 6. And, we just talked about My Cousin Vinny, and what a great movie, In the Den. And the Den, folks, is a state-of-the-art peer group, if you will. And it's so important that when you're trying to find another gear in anything it is that you're doing in life, you want to be able to find, a peer group that you can hang around with, if you will, that you can have them rub off on you that you can learn from. And at TFNN, we've got that peer group. It's called the Tiger's Den. And I mentioned my cousin Vinny, and everybody's got their favorite scenes. I've got, so many of them. There's the scene when, Vinny comes downstairs, after the train woke him up or what have you, says to the guy, does that train come through every morning at 5 a.m. or something like that? And he says, oh, absolutely not, sir. And of course, the next morning it comes through, at 5:15 or something like that. And, he gets upset, goes downstairs, said, I thought you told me it didn't come through at 5 a.m. every morning. He said, didn't. It's highly unusual. It usually comes through at 5:15. That was a little scene. How about when he gets out of the car, when they went out and tried to get away from all the noise, and they got into the mud, and he gets out of the car and, slides right on his behind, if you will. I mean, so many great scenes in that movie. But anyways, let's talk about great scenes in the marketplace and really what it is that you should be looking for, because it is key. You've got the Dow down 98, and then the S&P's down 2, and what you really want to be looking for is go to the ETFs right now, because we really want to see the diamonds and the SPYs get back inside the range. And the range we're talking about is the August 9th lows, because right now we're trading below that. And if you go to the diamonds, the August 9th area, the low on that is 105.94. 32 million shares we did. Right now today, you haven't gotten up to the top of that. You want to see if this is going to be a reversal of anything that's meaningful. You want to see it get back above that. And you'd like to see it get back above that today. So watch for a close that above that 105.94. You can expect it's going to be on lighter volume. And then if you get that, where's it going to go to? Likely it's going to get to the low of the swing point from September 27th. It'll get into that 111.09 area, and that'll give us the next clue as to what's happening. Because as you can see in this consolidation, hopefully you're watching me on TigerTV, and you can see that what the diamonds have done here is each time on the bounce back up, on a retracement back up, what it's done is it's gone and it's tested the swing points. The swing point from August 31st was tested on September 16th. It got tested again on the 20th. The swing point from the September the 16th got tested on the swing point from September the 27th. And so if the pattern is going to continue, and this is all about patterns, folks, what you would see if the diamonds can get back inside their range, you would see at least it get up to the low bar, the low of the September 27th time frame. Then you want to be able to take a look at volume. But you've got this blue trend line, if you will, that's drawn really from the highs, if you will, and the diamonds are holding on to this trend line. If we go take a look at the S&Ps, because I want you to know what it is that you're looking for, if you've entered into a trade and where things are at on the SPYs, same thing. August 9th, the low there is 110.27, 709 million shares. You haven't gotten up to that yet today. You want to be able to see a close above that so you can get back into the swing point. If you do that, then what you're looking at is you're likely looking at the SPYs giving you the next piece of information when it gets to the 116.84. So, folks, thanks so much for being here with me. You've got an amazing power within yourself. That power is so strong, folks, it'll build magnificent money masters. Stay tuned for Don Kaufman. Please catch me tomorrow morning at 9 o'clock. I'll kick things off, and have yourself a great day, and I'll talk to you soon. Bye-bye now.
Yeah, it's always better when